Okay, I'm going to do my daily review of the market, basically going over how I see the market. Everybody sees the market differently, and what I'm seeing and what I'm expecting, blah, blah, and some of the strategies I use to trade. All right, gonna first start off with the S&P, which is ES in the futures market. All right, as we can see this is today's candle, we got up to this previous high. I marked that out with a black line when I saw we were going up. I marked the previous high out with a black line, making that a target, perhaps. At least watch that for being a target. We got over the 20 EMA on the daily. So, and that's once I saw we're over the 20, I marked this off as a possible target. And this red line here was the low of yesterday, and the green line was the high of yesterday. And we actually gapped up higher. So we came to that target, to that level of the previous high, and then we fell down and basically closed right below the 20 EMA on the daily. We're almost up to that 50 RSI. And one thing to take note of, I know a lot of people were thinking that we're probably going to come back up to this 50-day moving average. And the reason being is because we have what they call the death cross, which is the 50-day moving average crossed under the 200-day moving average, which is a big deal. A lot of people pay very close attention to that. It's called the death cross. We had that. And so a lot of people believe that once we get that, we like to retrace back up into it. So either the 50 or even the 200 and before falling down. Because right now what we have is a higher low. We were low here and then we made another low here, which was higher than this low, which can be considered bullish. But like I said, some people believe because we had this death cross, we're going to go up and then we'll fall back down. Because I guess there's history, and whenever we have a death cross, we like to come back up to it. If it crosses in the other direction, it's called the golden cross. That's very bullish. All right, so that's the daily, what we did with this candle. Let's go to the hour. All I traded today was ES. I took 2 trades. One was just a little scalp because it wasn't an A setup. I did take an A setup, but it was right in the middle of something, an announcement, or I guess a headline that I didn't know about, so it kind of scared me out of it. But anyway, on the hour, this was my target, previous high on the daily. We were bullish, obviously. We had the 5 EMA over the 20 EMA. That's what we started off at. That's the situation we started off at. And so my first thing I've been doing is, this is the 7 o'clock candle. And since we're bullish, if we're bullish on the 5-minute and we cross over, or looks like we're going to cross over this 7 o'clock, above the 7 o'clock candle, then I get in long. So initially I had a line drawn there on the just so I can trade it on the 5-minute. So just go over the hour. We did go up, and then we dropped below this previous low on the hour, the candle. And this blue line, these 2 blue lines, is my opening range. So that's my 8 o'clock hour candle. So this candle is from 8 o'clock to 9. And I blocked that out as an opening range. The theory is that if we get below the opening range, you can go short. If we get above the opening range, you can go long. It's just a guide for me, and I kind of like it because it seems like it sometimes serves as support or resistance. Because if you look on the hour, we got below the opening range, the 1 hour opening range, and that became resistance. We kept going up to it and falling right back down. And then what became support was the 20 EMA on the hour. That became support. So let's go over the trades for today. Or if you just look, I go over the hour trade. So that's one trade right here. I just said we got over the 7 o'clock candle. And not only that, if you could look at this wick, we wicked down first, and then we got over the 7 o'clock candle. But there was a lot of wicks right here. It was a bad time to trade, but we'll see it. And then We went lower. Of course, I should only be looking for longs at the time because we're still in a bullish cross. But, you take B setups on the 5 minute. Let's go to 5 minute real quick. Let's see. All right, so here we go. So this is probably, this is the high of the 7 o'clock candle that we had. And look at this. Look at all of this. This was the headlines that they were saying that Trump was not going to, they were going to slash the tariffs that they have on China. And then once the market heard that, I don't know if it got confused, it got bullish, it got bearish, it got bullish, it got bearish. So it was kind of confused. So I'm thinking to take this trade. I'm not aware of any headlines that are going to come out. So I jump in the trade. Once we got below here, I figure, okay, that's my pullback. And I got in and it just started going up and down. It just started acting crazy. So I just got out with whatever was on the table. And I ended up getting out with 5.5 points or something like that. And I just got out because I didn't know where we were going. I was in, if not this, it was probably this candle or this candle. No, actually, you know what? I got in on this candle. I didn't take this candle. But after the news was reported and we went down and all of that, I just figured, okay, it's settled out. I can get in. So we went down here and I got in like, I don't know, somewhere around here, near the 5 EMA. And we were still going up and down, up and down, up and down. And I ended up just getting out. So I thought that would be the only trade I take, but because I told myself I was only going to take A setups because I'm already at my target for the week. But I took a B setup scalp, which I shouldn't have taken. But anyway, so this blue line was the first, the opening range was just the candle that was from 8 o'clock to 9 o'clock. This was the top. And this blue line at the bottom was the bottom of that range. So when I took my little scalp, it was a B setup. We had already got under the low of the opening range. And then we went right back to it. And we had the 5 cross under the 20. And I thought we'd go back down here. This red dotted line was the 20 EMA on the hour. So when we crossed back down here, I got in short here and I got out fast, which is a good thing because on this trade, we actually didn't make it back to the 20 because I was going to take it back to the 20, but I wasn't sure. But I took it because I saw we rejected the bottom of that opening range. And when we rejected the bottom of it, I was interested in getting in short. So I got in short. I got in short exactly at this 200. And I just took a little scalp and got out. I think I got like $162. So that's like almost like 3 points and some odd extra. And then we came back up to the bottom of the opening range. As you can see, this opening range is pretty respected. And then we rejected it again. Then we got back up to the opening range, the bottom of the opening range, and we rejected that again. So that's why I'm using the opening range. It seems like it's being respected, and it can serve as a guide. I'm still using my regular entries on my 5 minute, which is I like to see the cross of the 5 over or under the 20, and then I like to see the retracement, at least back to the 5, and then I can get in at the top of the candle. So I'm still doing that, but this serves as a guide on whether I should go ahead on and take that short or go ahead on and take that long. As you can see here, this was the opening range. We never closed above that. We just kept falling right back down. And we didn't want to get too far under that 20-day, 20 bar moving average on the hour. Let's see. On ES, we did have one candle close below it. So we'll see what happens. Okay, I'll go through NQ really fast because it's pretty much the same as ES. Okay, yeah, we did the same thing. We got over the 20. We got the death cross. We didn't get there, but because we closed right underneath the 20-day moving average. And we're pretty much at the 50 RSI. So it's the same as ES. And then you go to the hour. We had pretty much the same moves. The only thing with NQ is that we didn't close under the 20 EMA on the hour. We did not actually close. It served it really good as support. So yeah, we got up and then we start heading down, and we basically consolidated at this area, which was pretty much the bottom of the opening range and the 20 EMA. And you can see the same crazy price action this morning on NQ. And we had this, well, didn't get quite as high on this one as resistance. So yeah, it's the same. All right, let's go to gold. I traded yesterday. Yeah, I didn't trade gold because I could have had one good trade on gold. Let's see. Let's go to the daily on gold. All right, yeah, we're taking a break on gold. We were very extended. We were at 80 on the weekly RSI at one point with gold. Yeah, we were 80. It was definitely time for gold to take a break. So after yesterday making all-time highs, we came down. Today we got lower than yesterday's low, which I should have taken a short with micros. I wasn't paying attention. I got to start paying more attention to that because that would have been a really good short with a micro if I had got in. We closed below the 5 EMA. We kind of got to this previous resistance level. So maybe that will become support because once we pretty much hit it, we wicked up. So this is another thing we'll see whether we come back down. We could come down further to the 20 EMA, which wouldn't be a bad thing considering we were so overbought. All right, let's look at the hour. Okay, so we were bearish coming in today. This was previous low. This was previous high. If I did what I was supposed to do, trade a micro, this red candle closed under the previous low, daily low on the hour. We came back up and we came down, and I could have just got in at the bottom of this. If we got below this red candle that broke below and closed below the 5 EMA, and we got back below the close, could have just got in here. Or if you want to be conservative, you could have just got in whenever we got here. But you would have had to have a bigger stop. See, if I had got in here, I'd have had my stop here above this candle with one micro. And that would have been a good short. But as for today, okay, on the hour, we had the 200 bar moving average here, which we just danced around today. So as I was saying, there was one good trade on GC that I could have taken, but I was watching ES because I thought we have fallen a lot. The RSI was pretty low on the hour, so I was more interested in ES. So this was the 7 o'clock candle. If we broke this and had a short setup on the 5-minute, this would have been a nice trade short to the 200 EMA on the hour. Like I said, I didn't take that. And then we just kind of chopped. So this candle was the 8 o'clock candle. This was our opening range. And as you can see, we had nothing closed above it or below it. So we were just ranging today. We weren't really trending. So there was really no trades for me for GC or gold. All right. All right, so this was the 7 o'clock low. We were already in a bearish situation on the 5-minute. We had this red candle here break and close below that, and then we pull back up. I could have got in there for a short to the 200. This gold dotted line is the 200 on the 200 bar moving average on the hour. So once this came back up to this level, I could have taken that short to the 200. And then we just kind of chopped. I mean, as you can see, that's the opening range, and we really didn't get above it or below it. We just stayed within it. So for me, that's not a good trading day for me. Like I said, you got some that'll long this, short this, long this, short this. And trade like that. So gold was a no trade for me in the afternoon. In the morning when I was trading ES, that would have been a good trade. And let's take a look at crude real quick. I didn't look at crude at all today. I'm sorry, let me look at the daily. It did something crazy. I did look at one crazy thing because I had heard it had did something really nuts. Okay, so crude, we're pretty much in a daily range. We're just staying in this here range here. We don't look like today we got above the 20, but we didn't we closed below it. So we're not ready to go over the 20-day moving average. And we pretty much have the 5 EMA almost serving as support. We closed a little bit below it today, but not too much lower than it. So yeah, we're in a range with crude. So if I were trading the hour, all right, so at the beginning of the day, we were bearish. If you were just trading the hour, this was a nice trade right here. This red candle confirmed the cross of the 5 under the 20. And we came right back up. This was the 8 o'clock candle. We came right back up to the 20 and could have jumped in at the 5 if you were very aggressive to go short. Could have jumped in at the 50 if you were not so aggressive. If you want to be conservative, you could have jumped in whenever we broke this. That would have also been a good trade to the 200 on the hour, which would have, given you like a $500 trade. So that's not so bad. Let's see. The opening range was this candle. So we pretty much got below this. And that would be telling me that shorts are more likely. Let's see. Let's look at the 5 EMA. All right, this is the one I was talking about with crude that made me look at it because I listened to Top Step TV on YouTube, and I heard they were saying a crazy move had happened with crude, and I looked and I saw this, and I'm like, oh my God, look at this. I don't know what that was. I have no idea. But okay, on the 5 EMA, let's see, we were bearish. So at 8:30, we had this. We had crossed and became bullish, but then we crossed back down, but we had this crazy thing. So you'd want to get in here or here. This red line is yesterday's low. But I don't know if there would have been an entry. You would have had to chase it down. All right, this would have been a good trade. We got to yesterday's low, and then we rejected it. We had this red candle close below the 5 EMA. Could have gotten a retracement up. The only thing bad about this is because if I had got in at the bottom of this after we retraced up, I would have had to have a huge stop, or else I would have gotten stopped out. And crude does this every once in a while. That's why I don't like really trading crude that much, because you got one here, we just have these crazy moves every once in a while. Just have to have bigger stops. And so, yeah, we came down. And then at this point, I wouldn't have wanted to go short anymore, really, because this is support. This has been support, which is somewhere like around the 5 EMA on the daily. It's support, so I wouldn't want to take it. But again, a range trader, we're in this. You can definitely see it's a range. We got to the close of the low of yesterday, came down back to this, which was like the 5 EMA on the daily. Got back up to the low of yesterday, got back down, and then the market closes, I think, at 1 Central. So then we just kind of lost volume and just did this here little choppy thing. But yeah, so that's today. It's going to be interesting what's going to happen. It's been interesting times, really, with the market. Lots of volatility. I've been doing pretty well in the volatility. So far this week, this is already my most profitable week. So I'm telling myself I only want to take A+ setups. I had a good day yesterday with gold. I ended up making almost 700 with gold. Let's see. All right, so today with ES, I got 425, and that's with that opening. The opening trade, I intended on getting 500. I had set my target to get 10 points, but then it started going up and down because of the news release or whatever. I just got out, and I think I had 260 something. And then I got in a B setup that I was kind of nervous about because I shouldn't have got in, and I just took 160 off of that. So I'm going to try to be conservative tomorrow. I'm not going to trade Friday. I'm going to try to be very conservative tomorrow. May and may not trade. I got physical therapy, so I may and may not do a review. But yeah, I don't want to lose what I made. I'm pretty content with what I got this week, so I want to take it easy. And that's it. Bye-bye.